Hey, gang, welcome back. Sunday, May 1st. Wow, it's a May already, 2022. You've got GP, JFDI, Nick, and Bags here for another TA report on this beautiful Sunday here in Denver. I can't speak to where you guys are at, but it's an absolutely gorgeous day out there for us. And speaking of not so gorgeous, or it could be gorgeous depending on how you look at it and your perspective, we just had a massive washout maybe on low volume on Friday. Looking at the S&P here, and this is the monthly. Just not a pretty monthly, not a pretty weekly, not a pretty daily in the Bulls case. But anyway, I just think, guys, we discussed this a little bit Thursday, right? That people are getting beat up in the market right now. People are kind of getting tired. So we're recording today. We're not going live. But at the same time, I mean, you just got to be a realist of, what price action and what the charts are kind of showing us. But GP, we were just mentioning this right before we hit the record button. No one wants to hear your exuberance. Expand on that a little bit.
Sorry, maybe exuberance is not the right word, but I think just what I just posted right on StockTwits, which is we've been in a downtrend for a really long time, and the world is showing up to tell me and the world that it is time to get short. It is the end of the world. It is time to call it quits, put that money into an account. Don't look at it for another decade. Hopefully it comes back. Hopefully it doesn't, whatever, doesn't matter. People are like, yep, it's a short. Where were you about a year ago? Where were you 16 months ago?
Yeah.
Where were you through this whole process that now you're coming here? So I'm at the point where I want to help, but no one wants to hear it. So I'm trying to find a balance between that. But my exuberance is the fact that the price action is crappy. There's no denying that. We broke on the Qs. We broke SPY. We did not break, right? Just in terms of reference points, we didn't break.
We're living on the edge, though. We're living on the edge.
We're living on the edge, as the markets tend to do in most scenarios since the edge of the beginning of time, right? They push as much as they can until they can't. So the Qs broke, right? Hands down. Amazon crapped the bed. A lot of volume, almost capitulation type volume on that move down. We tagged so after COVID in 2020, we had the big V rally out, and then during April OPEX, we had a big move out of Amazon and Netflix and a few other names. And then we had this ridiculous thing start called the gamma squeeze, right? And it was the gamma squeeze up. And we spent literally the what I would say the entire summer months gamma squeezing every month, right? You literally just have to, take a dart, throw it on a dartboard, and you were making money because that's all you had to do. And we're in kind of the exact opposite. We're in the gamma squeeze to the downside, right? And until we start getting price action that to me reflects what people are actually selling versus hedging flow, right? So that's what Bags, you and I were talking about before we started the record button here was Friday. If you start to look at the Friday, it kind of gapped down a little bit, got bought up immediately on fairly, if you do the 5-minute chart on the on the Qs, let's go to the Qs. If you're pulling it up, not the futures, the Qs. All right, so if you go, we had the little small gap down as we're trying to kind of break out on from Thursday to Friday. We're trying to move out of this kind of consolidation zone, and you see a little bit of downside move. You had the big buy to kind of start the day, to end the day on Thursday, gap down a little bit, but it was a hollow candle up. We kind of muttered around, and then we started to break higher, right? And then you see that red candle on the next one right around 10:15. That was the JP Morgan mini hedge fund hedging the hell out of their existing portfolio. So what does that mean to me is that JP Morgan wasn't selling their portfolio, they were hedging it, which means ultimately that after we're done with all this stuff, that they still think the market's in a great position and they don't want to be out of it. They just want to be hedged for any short-term downside. Those hedges were out to July. Doesn't mean we can't drop like another 50% from here in 2 months, but let's be real. A lot of these companies are still doing pretty well. They're just being sold.
And it doesn't mean they can't take those hedges off too.
Yeah, they can't, like, it was so the way that the structure of the hedge was that they sold to be delta neutral. They sold Friday 4,000, I think, XPX calls, and then they had a bunch of puts out to July 29th, right? And that's what essentially caused the big gamma squeeze down. And 10:15 is right around when these puts started flying in, and that was the end of the move. Yep. The rest of the day, it was just going to be trending down into the lowest kind of. Dealers are forced to hedge their own, right, to be delta neutral, so they got to sell down the futures while they're, anyway, it doesn't matter. So to me, there's a lot of this kind of, we're getting price action because of hedging, and with the liquidity being absolutely garbage, where we're just moving straight down. It is literally the opposite of 2020 summer. And Amazon, if you're looking at Amazon took a massive dump.
Don't go there. It's too soon. It's too soon.
It's too soon, but it held the April 2020 OPEX breakout, right? That's the biggest thing. That was the big move before all the gamma squeeze started. But April 2020 was, the high was 2475, I believe, if you go like to the monthly, and we tagged it, we broke below it, and then by the end of the day, we were closing above it. And there's a lot of volume to finish up the close, right? That was the cup and handle kind of breakout, consolidation breakout, and then you had the gamma squeeze out for the rest of the summer, go sideways, and now we're coming back and retesting that breakout. So like this is all constructive to me, and I'm just not bearish after this long, right?
And I mean, you guys remember me on Thursday. I was pretty bearish. For me, that's very bearish. And after Friday, I'm a little less bearish. I'm still bearish, but I'm a little less bearish. And I don't mean just specific to Amazon, but for the market as a whole. I posted a whole bunch of charts on Thursday morning or Wednesday morning. I don't remember. But I was using the volume profile, and there's a whole lot of spaces between gaps, and I'm not going to go through them all, gaps in the volume profile that could lead to move below. But at the same time, they're kind of holding at the top of where that gap could be. And Friday, as we were talking just before Nick hopped on, that's exactly the kind of day I want to see for some capitulation in the market. I'm not saying that we can't go lower or we won't go lower, but I think Friday shook a lot of people out. And that's basically what this market needs to be able to eventually go higher at some point. There wasn't a lot of volume, but there were still, price action was getting flushed. And, we're just looking at the S&P mini right here. I mean, 3.6% down day. But if we looked, I mean, we were trying right at the start of the session, we were trying to push higher, just like you said, GP. So I was kind of glad to see that flush. Had we sort of stayed somewhere in maybe this type of range here, I would have been even more bearish than I am today. But I like the fact that it pushed down. And this is a mark that I've had on the chart for a while right here. Let me take that off there. But this is sort of an area that I've been looking at. And, of course, this is basically a retest of all those wick lows. But we've pointed out I don't know how many times in the past, sometimes they like to undercut those lows a little bit before they take it the other way. So that's kind of what I'm watching for. If we see a move, lower, I think I would probably be ready to buy as opposed to just sitting on my hands like I have been the past couple weeks.
Yeah, not totally. Like I can see a move to the yearly lows, right, of
Yeah.
2021 for a lot of these. Maybe not the S&P, but for the Qs for sure, because they've been weak all year.
Yep.
But you have historical stuff going on right now, right? Like what was that? Excuse me. $60 billion in outflows into money market funds this week alone. Like that's to me that's ridiculous, right? Yeah. And the market just loves not having participants.
Yep.
On the moves up. So I can see that 297 level hitting and then reversing or undercutting and hitting. 303 is the September 20 on the Qs. This is 303 is the September 2020 kind of end of the gamma squeeze movement. So we can go back and test that level too. So those are the areas that I'm kind of watching. I'm honestly expecting similar to January 24th, right? Like gap down, test some ridiculous level, and then finish green.
Yep.
Yeah, to go off that, I'm in Bags. I'm kind of in more of your camp in terms of if we get just a slight leg lower, like I kind of think those round numbers are going to act as a magnet. And with how we closed on Friday, GP, I kind of agree with you. I wouldn't be surprised to see a really gnarly gap down. And like who says, I mean, if we gap down on Monday and open up near those round numbers, 300 and 400, I'm a buyer. Like I'm buyer like at least across the names that I wanna own longer term for sure.
Yeah, I mean, and what I can also see is all of this taking place in the overnight futures, right?
Yeah.
Yep.
And all of this happening in the overnight futures, and by the time we wake up, might be a different story. So, like, it hasn't been so far. Futures haven't over the last 6 to 8 months. Futures have not been an indication of what actually happens during the markets. Like, I think the stat was happening mid to end of last year about how 95% of the moves were happening in the futures market, right? And now we've completely flipped to we're not having our moves happen in the futures market, we're having them happen real time.
Right. And that's atypical, right, to what has been the historical process basically since futures began trading. What was that, 80, 82 or whatever.
So stuff to keep on your radar, right?
Yeah, for sure. And I mean, that coincides. I mean, the 400 level on the S&P and 300 level kind of coincide with where I've had marked for a minute. But at the same time, like, we looked at this chart, I think a few weeks ago. I think this was when you were out, Nick. This is a setup that was coming into the whole rate issue, right, with the Fed back in late 2019, right? This was that move. And this is still not dissimilar to that. And we could, while this is a monthly bar and this is a monthly bar where the arrows are, we could still see a move similar to that with all of a sudden seeing a May bar come up out of this level right here. So while I definitely think a 400 or a 300 could be a very good possibility and one I would probably take, I don't think it necessarily needs even that low. It could come in, the S&P could come in sort of around, let's say 405 even. It doesn't have to come all the way to 400. But I think you're right, Nick. I do think, psychologically we like round numbers, but the problem is the algos don't care what the round numbers are. The algos are going to flip one way or the other, however they deem fit. And I think a washout or a breakdown of these moving averages, we've already lost the dailies and the weeklies, but we lose this 20 on the monthly. That could be a trigger to all of a sudden kick in a buy program.
Yeah, I think also like the magnitudes of these moves, we have like, even in, I guess the maybe this is just everything's changed and this time it's not the same or it's completely different, but the magnitudes of these moves are insanity, right? Like you're talking about 3 standard deviation moves on monthly on 2 of the largest kind of bull market leaders, which is Amazon and Netflix. They both closed way under their 3 standard deviation of the 20-month moving average, which I think is kind of nuts if you go to the monthly.
I'm getting there.
Yeah. All right, look at that. It's never done that in its history.
Yep.
You can go back and like Netflix too. Even when Netflix had its 80% move down in 2011, it didn't do this.
We've got a whole new class of a whole new investor base, trader base that I think entered the market in 2020, or even like within the last few years, I think. So I feel like that is why we're starting to see some of these exaggerated moves. In terms of 2020, I don't think, like if you look at like, let's just say any of the names that like, let's just say ARK was involved in, they pretty much went straight up and straight down. And I think that just tells you that there was not a lot of big money, chasing and really involved in those names other than like ARK and her kind of following.
Yeah, I think ARK's a special circumstance though.
Right.
I definitely see where you're going, Nick, but some of the move, like in Amazon, like that's not retail moving Amazon around.
No, definitely not. Definitely not. That's okay. So let's just say the big money is starting to move out of these, big cap tech FANG names, and they start stepping into a lot of the names that ARK was involved with, or like that kind of following, that kind of crowd. Because I don't think that there's any argument that, it really feels like this decade we're kind of at that intersection of health science and technology. And a lot of those names that they were involved with, I think, are the future, but it was a sprint start. They took off, and it's like, I think that we're going to see the cream rise to the crop here. And I agree with a lot of I don't remember who it was that I saw tweeting, but they were kind of sitting there saying, hey, the longer this correction goes, the stronger and longer this next bull leg is going to be. And so
no doubt. They literally just wiped out. Literally wiped out. So like people talk about like this new class of investors, like not you, Nick, but I've just been reading over the weekend that this new class of investors has no idea what it feels like. That's every year, right? Like, I'm sorry,
Yeah.
like Jesus, right? Like you're like let's be practical. The people who are running the stuff is not the new class of investors.
That's
These guys it's still the ICANNs and the Buffetts. Buffett's 97 years old and he just got reelected as chairman of the board. Like these are the guys who are moving money. It's not the yous and me's of the world. The yous and me's of the world are the ones they've been distributing to.
For sure.
And now they've really just kind of eroded all confidence in all of those people who are now going to watch. Potentially it goes to zero, everything goes to zero, or they're going to watch an epic rally, right? And they're going to be frustrated and they're like, I'm not trusting this market. Right. We just had on the Qs, for example, right? We just had a really solid bounce on the Qs. We went from 318 to 370. We made a new high. and we closed over the 200 SMA, and they just absolutely untethered destruction since then. So like people have no faith, right? And if you think anything else was more hated, if we V-shape or if we rally out of here, oh, the hate is going to be crazy. It's going to be bananas, right?
Well, I mean, 5-6 weeks ago when we, made that low right here, right? I mean, that was a hated 3.5 weeks for people. I mean, no one wanted it to be true and everybody hated it. And yeah, I mean, anytime that there's a V or there's, a sudden change of direction, it's hated by the side that's not going that direction, right? That's just natural.
Yeah.
But I think that that we do have a possibility at that, and I know this is a tone change from where I was at Thursday, but like I was saying, one session doesn't make a trend, but one session can give you a different idea on what your thesis might be. And by having that flush, I mean, I posted the chart of the advancers and decliners at the end of the day on Friday, and it was like close to daggone near 90% decliners, right? I want to pull it up right now.
86 or 87.
Yeah, I mean, it was close to 90% decliners, and that's the type of washout day you need to see, and maybe not just once, but consecutively. And even on Thursday was a big, it wasn't as dramatic as Friday was. It was up, but from the after hours session, seeing what happened to Apple and seeing what happened to Amazon, it felt like Thursday was just a complete cuck, right? Like, it's Thursday was the bull trap that I was mentioning. So I think that it's just I think there's a lot of playing of offsides, and hopefully, for my long holdings, we and your guys' long holdings, everyone's long holdings, we get a bounce out of here soon. That would be wonderful.
Yeah, and so the question I have for you is, what if we just gap and go for the rest of the week?
Gap up and go.
Yep.
I think on the Qs, I would use 330 as my trigger. I'd be long over 330. That would be my entry point. Because I think that there's an ABCD leg setting up.
Yep.
To that round number. I'm either long over 330 or I'm long versus 300. One of the two.
Yeah.
Oh, I'm sorry, on the Qs bags, not on the SPY.
You have the Qs up. Yeah. Okay. So like, kind of like that 3-4-15 candle, right? That 314 candle looked like we were going to end. Close below the big candle down there. You have it open, bags. Yeah.
I'm pulling it up with some volume for you,
Okay.
GP.
Yeah, I see what you're saying.
Right. So
yep.
we had that move, the invasion low, right? On 317 or whatever that was, or February, whatever. That was the invasion low. We bounced up off of that, came back, dojied, hit the 20-day, same kind of, and then we had 3 or 4 days straight down, broke the prior pivot. Doesn't that look in almost entirely the same here?
It could. It definitely could. Yeah.
Right.
So as far as the
I was
gap,
wondering like what you would do if it was just the gap and go scenario, right?
As far as the gap and go, I wouldn't chase up yet. I would want to see it confirm, because we had the same situation, right? If you're talking about this area right here, yep. I think that's what you're talking about.
Yeah.
We still had that retest. So I wouldn't be a chaser there until we finally broke above probably the daily 20 EMA. That would just be what I would be looking for, because the 9 and the 20 seem to have been the strongest moving averages, that have given problems. I mean, if we just look back, right, we've got this area, we've got this one, we've got this one, we've got this one. So I would want to see it above that. I would feel good, having to quote unquote chase once it got up that high, but until it breaks above the 20, I wouldn't be too eager to just jump in on a gap up.
Yeah. Okay. That makes sense. I still look at that volume on Friday and I'm like, what? What was it? 4.5% down, bang on. And volume was the lowest of the week.
Yeah.
I find that so like everyone's calling for the end of the world and no one's selling. Is that what's happening?
I mean, I certainly am not in the end of the world camp. I think that sounds like a lot of drama queens out there. You know,
I understand that, Nick. I'm talking about the talking heads. Like what we say, we have like 100 viewers. No one's really listening to us. I'm talking about like the
algos
CNBC.
are.
Yeah. Well, maybe they are. It's like, damn it, these guys. We should.
I shared my SPY and my Q, the daily charts, just a second ago on StockTwits.
Here, pull them up.
And there's a lot of, okay, let's see here. So just looking at kind of this channel, I like the 5 waves. So, you know, you got 1, 2, 3, 4, 5 is kind of down here in this 290 to 300 area. You had this first ABCD leg down, which started here. You know, it was A, B, C, D, and it completed. And with the close on Friday, it kind of looks like we're starting a second ABCD leg down, which would be A, B is here, C here, and then D would complete. Same thing right down here around 300. Again, I think there's a lot of eyes on these round numbers too. And so it wouldn't be surprised me to like see some form of like, you know, spike and run. Again, to GP's point, that's why I'm saying I would be a buyer over 330 or a buyer versus like kind of these round numbers down here.
That makes sense. This is no man's land right now, right? So
Totally.
100%.
Yeah, totally. And the 20 EMA is at 335. So I have a hard time disagreeing with that too.
SPY is kind of a similar look. Just here and kind of same thing, right? Basically around. And again, like exactly to your point, like everyone's talking about the end of the world. I like it when you know, Dews talks about the markets in turmoil specials. I don't know if those are happening yet, but
no, man, CNBC is avoiding it like the plague. Like, it's like they almost know.
Are they really?
Yeah.
I got to be honest. You guys know I've had a lot of stuff going on the last few weeks. I haven't watched a lot of CNBC, so the fact that they haven't thrown up a markets in turmoil over the past couple of weeks, I'm really surprised.
Yeah, me too. Honestly, like
they haven't during this whole time. We've been in turmoil for a year, and they're like, no, just kidding.
They must just be paying attention to the general indexes. I don't know. I mean, like how much more can
we're at 21 or 22% correction in the Qs. They don't have a markets in turmoil. What is their existence? What is the value of their existence?
I don't know. Sell airtime, just filling airtime. Yeah,
that's exactly my point. I don't listen to CNBC. I always wait to hear the market in turmoils, and we haven't seen one yet. Tells me that they've caught on. So
from
that's
from November 22nd high, we're exactly 23.5% off the highs of the Qs. And you know, I mean, if that's not turmoil for a lot of people over the last 6 months, I don't know what the hell is. Right? Seriously.
This is like everyone thinks you have an opportunity and a chance, but it all works together, right? Like,
yeah,
these guys all play I'm not going to call manipulation, but it's not a free market world, right? All this information, anything you're getting or hearing or know about is already known, right? Like nothing you know has anything to do with anything. Which is
Well,
like, and the more I do this, the more I step away from all that stuff and focus on charts and stuff like that. And it gets me more and more into that. Like flow is all that matters. Their fundamentals don't, like, there's companies that trade at insanely cheap fundamentals for many, many decades. Just because no one's really cares to buy it. And there'll be people who hold it, get their like 3-5% dividends, happy chappies, but it never gets the true momentum that it needs to get, right?
So
Because
one thing we didn't touch on Thursday was, we had some challenges with scheduling last Sunday, but the prior Sunday that we were on, GP, I got to bring it up. You said, where is the Q's going to finish? And we were all three wrong. But GP said 350. Nick said 333. And I said plus or minus 1%. All it did was minus 3.85% and closed at 325. So what the hell do we know anyway? But where I'm going with this is, we've talked about, maybe we see something in the futures market today or tonight, or in the morning session. How are we expecting futures to open up here in about 20 minutes?
I am in the oh God, man, it's public, so it's gotta be 100% accurate, or I gotta be able to delete it later. Let me know. I think it's a gap and go situation personally. But
gap up and go.
Yep.
Right out of the chute. The gap up and go.
I have two scenarios in my head, based on like the chart that I posted. The last 5 minutes of the futures in the NQs was the second highest volume since we gapped down on open January 24th. That was the Friday close. I'm in potentially the gap and go. If not, we get the entire movement to the gap down. So like if we're talking about futures, I think it might gap down, test that level, and then by open, I think the Qs are gap and go. That's the way I'm looking at it.
Nicholas, what say you?
I don't think we see a gap and go. I think we start to see some, like, what some might consider a capitulation. I don't think it's going to be.
So down open on futures is what you're looking at?
I don't know if it's a down open. I would just kind of expect to see like a follow through week.
Yeah.
Kind of lower, but honestly, nothing would really surprise me. I think it's interesting. We're in the information age, right? And we all have read the same, more or less. If you've been in the industry and done your due diligence, we've all more or less read the same books. We look at the same patterns, and it's becoming much more of a trade the trader type market. And so if how there's that saying, sell in May, go away, or whatever it is, it could very well be the exact opposite of that, where we do see a little bit like we shit the bed here, and it is the time to buy and bounce.
And that's Nick, I've been hearing a lot of that this weekend as well. It's what if it's buy in May, right? Not sell in May.
It's opposite day.
Yeah, it's like all there's so much information that the contrarian viewpoints are not contrarian anymore.
Yeah.
Totally.
It's just bananas when it comes to that stuff, right? Like I said it on Friday. I said buy in May, stay for the decade, right?
Yeah, for sure.
And like I saw that at least a handful of times now on between Twitter and StockTwit. So I give up, man. I'm just not going to say anything anymore.
It would, let's just say the first week or two or week in May, we get that kind of shit the bed candle. that would knock a lot of those people out, I think, that are talking about, buy in May. It'd flush that camp out. It would flush out even the MBG camp where, he thinks that I don't know what he said, whatever, he thinks we're heading significantly
The
lower.
200 EMEA.
Yeah,
There's so much
recession.
There's so much confluence here in this like 300 to 280-ish zone that what I think happens, I think we see a flush, and I think we start to see that bounce from there. However we bounce out of here, I don't know how it plays out. I don't think it's going to be necessarily pretty or easy to play, but if you are kind of picky with your longs and you don't need to be going all in on this puke, but if you start to build your positions, I think this is a good time to start building if we get that capitulation into here.
Yeah, I mean, coming back to what I was saying, two things first, three actually. First thing is, coming back to what the volume profile is showing. Like if I look at the cues from a volume profile,
Take my,
there's a gap here. Let me turn my screen back on.
Excuse me.
And we're looking at a weekly here. So there's a gap right here until you get down to, like you're saying, Nick, like that 280 spot before you finally hit that confluence. And sure, I mean, I don't want to see it go down there, but it absolutely could. I think that the more likely scenario is it gets in this 300 pocket right here. You see what I'm talking about?
Yeah.
And that's the gap that it might want to fill up right there. And just below that's, 296, 295 area. That would be a very logical bounce point, but we have to break into that area first. We're still holding that, like I was saying, like 306, 305 area. You undercut, the volume profile or the trend. Right? I mean, if we, not the trend, but we could call this a support area right here, roughly. You undercut somewhere through there, and that could also serve as a bounce point because all of a sudden some volume may come in. So I don't think that that's so crazy. I'm kind of, for futures, what I'm thinking might happen is, GP, I'm with you on that. We could open up and we could be up, but then that could be sold off, and that could be sort of the last I got you moment, right? Like you thought we were going up, but I'm pulling the rug moment. I think that could be a scenario if we did open up higher. A gap up, I'm not going to say that that we're going to open up with a gap up. We definitely could. And if it does gap up, I'm more in your camp, but I'm somewhere between what Nick's saying and just saying that, we probably still have just a little bit lower to go. The last thing was, I just thought it was interesting. We talk about chart patterns a lot, and I thought it was interesting to have Max come on right when you left, Maxwell House from Charts for Charity, right after you left, Nick, to talk about some chart patterns. And he's a very trend trader, and calling out that the patterns are bullshit. And that's my words, not his. I'm kind of falling into that camp where I've been making fun of people for years now, saying, well, it's a cup and handle or it's a head and shoulders. And how many times, he does have some valid points. How many times do these chart patterns really play out? They do, but it's not as high as what price action and the trend is telling you. I don't have empirical evidence to say that. I'm just using my own knowledge of history of the markets over the past few years. So I'm kind of the opinion of, I'm really watching the candles, and I'm really watching, how we close and how price action is. But we looked at this potential head and shoulders the other day, right? Like here's a potential head and shoulders on the S&P. I don't know that I'm buying chart patterns anymore. If they play out, great. If they don't, it's kind of more of a, Yeah, I didn't figure it would anyway.
Pivots
On the
over
lo-
patterns, man. Pivots
Yeah.
over patterns.
Yeah, for sure. For sure.
Right? Pivots are, to me, pivots basically are where buyers have either shown up or sellers have shown up, right? So 370, 371 is where sellers show up on the cues right now. And so far, the buyers have kind of shown up in this zone many
Let's see,
times over the last year and a half.
we were talking about the cues just now in the volume profile. Like we're technically into that gap on the S&P. So a 390, right, would break that 400, which is that round number, and have people sort of, clenching their buttholes, right? Like, if it got down into 395, like people think it says it's the end of the world, but really, to me, it looks like you might have some support right there. You see what I'm saying?
Yeah.
So I don't know. I think my bias short term is still a little lower, but I think we're closer to the bottom than we are anywhere near a top. I don't think we ever see a top.
Yeah, I agree. I think we're closer to the end of it than I think we're closer to the end of this than the beginning.
I mean, I think there's two camps here, right?
I mean, you laugh that there's never a top, but allow me to present this, right? Like, it's just going to keep going higher over the course of time.
Yeah, and we've talked about this, right? The indices are designed to progressively always be higher, because when stocks that are underperforming, they just get thrown out. So
Yep.
It's not the same stocks that were in the S&P 500 that were there 30
That's
years
right.
ago, 60
That's right.
years ago. So that is the general trajectory, which is why there's so many things out there that say just dollar cost average into the S&P, and you'll most likely outperform most individual stocks over the long term.
The one thing that does have me a bit concerned, you guys know I keep up with this, and I'm gonna keep pounding it over the head. I think Bitcoin is at a spot where it has to hold. It could come just a little bit lower and still bounce out, but I think it's coming to decision day sooner rather than later on if Bitcoin is going to go higher, and if it is leading the market in direction, whether if it goes lower, the market goes lower. If it goes higher, the market goes higher. So I think
I have a question for you. Do you think Bitcoin, this is my thought process, I think Bitcoin bottoms when the last Bitcoin gets mined. We're what, 19 million? We need to get to 21 million?
Bitcoin bottoms when the last Bitcoin gets mined?
Yeah.
Like short term? Is that what you're,
just like fully long term, right? Like if your thought process is cryptocurrency is going to be around for
I think waiting for the last Bitcoin to get mined to get long, in my opinion, is a fool's errand. Okay. I would not want to be not invested in Bitcoin or crypto in general and wait till the last Bitcoin's mined. I do think you make a good point that once the last coin is finally mined, the last sats are pulled out of the old blockchain, that there's more scarcity at that point, right? Because they're not making any more. So I agree with it from that sense, but what the price might be when that happens, it wouldn't surprise me if price is much higher when that gets closer to happening. That wouldn't surprise me at all.
Has the relationship between Bitcoin and the indices broken recently?
Yeah, that's one thing that I've been watching. You guys know, before I've been, taking a little bit of time off, that I was monitoring that really closely, and I've still been watching it. I still see some correlation. Let me pull up a clean chart here. I do see some correlation still, but at the same time, it's not what it was, through these weeks back here. I think Bitcoin was doing a really good job of showing what the market had planned on doing, but let me pull up the comparison really quickly. Actually, I'll do it over here.
I think they're getting ready to collapse.
You think crypto is getting ready to collapse?
Yeah.
Good.
I think that they've chased a lot of people, whoever they are. I think the money has chased a lot of individual investors out of the equity markets, and they're holding up right now in the the crypto space. And I think that there's going to be a world of hurt coming. Just my kind of 2 cents opinion, I guess.
So what I was looking at during, basically all year long, right, is not the percentage base of the move, but who's doing the move first. That's what I've been watching. And we see peaks almost on the same days, but then we see a decline, right? Like the Qs, if we're looking at declines, like they bottomed later, right? But the peaks were pretty consistent, but they bottomed later. You see what I'm saying? And that was the pattern that had been pretty much following step by step. They bottomed later. So, crypto in general didn't have a great day yesterday. But today, I mean, there's some turnaround going on. It seems to be more in step. See what I'm saying? Like they bottomed almost identical. So it's going to be interesting to me to see, one, how the next week or 2 weeks kind of play out in what this relationship looks like between Bitcoin or crypto in general and the Qs and the S&P. But right now I'm still holding on to that, but it's getting closer, GP, to answer your question. I think the correlation is getting narrower as opposed to, I mean, this was almost a week apart, the 22nd to the 27th, right? And then it just kept getting narrower on these bottoms. And that's what I'd been paying attention to mainly. So we'll see. I don't know. And Nick, you could absolutely be right. We could find out tomorrow that it's all one big Ponzi scheme and everybody's getting money thieved from them. But I don't think that's the case.
I'm buying the collapse if it happened. That's all I'm saying. There's no question that I think that there's no question in my mind that crypto isn't the future. I just.
Yeah, no, and I'm taking the extreme perma-bear case, right? That crypto is a fraud in general. I'm not saying that you're saying that or mean that in any way.
Yeah, definitely not.
So then I have another question for you, Bags, because the other side of your Bitcoin crypto space has always been chips. And where do you think chips are going? Price wise, not world utility wise.
Well, yeah, price wise, the SMH and the socks have been in the shitter all year long. I mean, that it's undeniable, right? I mean, January 4th is the high and you're down and to the right, which I hate to see. I think in general, as far as chips, we need chips for everything. And I know that's not exactly the answer you were wanting to hear, but as far as miners go, there's still mining happening, right? There's huge mine farms of nothing but, mining happening. So all that's happening. I don't think that chips, when chips are leading the market, obviously tech and everything in high growth tends to be well. And we've seen in this huge hit in high growth and tech over the past 6 months. I think it's a symbiotic relationship. I don't necessarily think it's the fault of the chip makers. I think, we're still going to be using chips. It's not a demand problem, right? Right now it's a supply problem. And from what I know about economics, you can overcome the supply problem. It's much more difficult to overcome the demand problem.
Absolutely.
So it's only a matter of time before all that gets worked out. And I think AMD reports this week. Is that right? Or
They
next
do.
week?
Keep up the
Tuesday.
SMD. So even the AMD chart, right? Or the SMA chart, this is like, we had a lot of bearishness on chips. Like it's been weeks, right?
Yep.
and we didn't make a new low on Friday.
Yep.
Right. And NVIDIA, like it's been interesting watching the dynamic between NVIDIA and AMD and the other chip makers, right? Like if you look at Broadcom, if you look at like they've had some good moves, but the popular chip names keep getting smacked in the face, right?
Well, I think part of it is, there is a sense of some value, right, in chips. I'm not necessarily saying Intel, but Broadcom, right? They AVGO, they give a dividend, right? And I think there's some safety that maybe investors are finding there with, I know I want to be in chips and at least I'm getting paid to wait with my yield. So
NVIDIA gives you a dividend.
Yeah, it's my new.
It's so
in the grand scheme of things, Broadcom's dividend is one of the best in the chip space, right? So I know.
I only mess.
You're playing devil's advocate. I get it. I do that all the time to you. So turnabout's fair play.
It's not that, right? What there's a class of investors that only invest in dividends, whether it's peanuts or it's so NVIDIA has that, because it has this nominal dividend, it has that class base, and it's kind of it's not holding up stronger. And
futures than the rest, open up.
Yeah, and it's not holding. Wait, it wasn't we supposed to gap down?
Weren't we supposed to gap down?
Based on FinTwit, we were supposed to open.
Yeah. You'd think it was going to zero. Sorry, but back to the chips. No, you're right. There's an investor class that only wants to be invested in dividends, and they would rather be invested in a Broadcom than an AMD all day, every day, right? And that's just a matter of fact. I think part of what has happened to NVIDIA and AMD is less of a indictment on what's happening in the sector, but more of an indictment on AMD and NVIDIA, not from the company's perspective, but just at the massive runs that these companies have made over the past 3 years. And if I'm scared of the market, right, and I'm looking to get out, I need to sell some things that have been winners to be able to put into my boomer stocks, right? So if I'm in AMD from way back, but even if I'm in from the 70s, right, which would have been last June, a year ago, basically this time, even if I'm in from back here, I might want to take that gain and move it somewhere else where I feel a little safer. And I think that may be a lot of what's going on specifically with them. I don't think fundamentally that there's anything terribly wrong at all with these companies, or with the good problem they have of people wanting to buy the hell out of their product.
Yeah. What's interesting is Broadcom has actually had a bigger move than NVIDIA as of Friday's close.
Yep. You take, this is April of last year right here on NVIDIA, right? This is April right here. So even if you take that right there to right here, I mean, that's a pretty good gain if you don't want to stay with NVIDIA for whatever reason you may have.
Yeah.
I can't begrudge someone who says, okay, I've got 35% gain. I feel like I need to take it.
Yeah, especially with this craziness of the markets, constant need for validation every 5 minutes and all that other stuff.
But no, Broadcom's a great company. I actually had some Broadcom at one point, but as you guys know, I'm heavy now. AMD, Marvell, and NVIDIA are my 3 bellwethers.
I'm glad you didn't say Intel.
No, you don't know I don't touch Intel, but even Qualcomm. I mean, Qualcomm to me represents very good value here at the 139 mark. It's not where you'd want to be after coming up to the 190s, but at the same time, like, this could potentially be a base that's forming right around this area, right? And I don't know. It's hard for me to be it's hard for me to not be bullish on chips because again, they're in every single thing we use in modern society. And until the largest solar flare or electromagnetic explosion or nuclear war, it's the world's coming to an end. I don't see that demand slowing down, and that's a good problem to have for these companies who make the best chips in the world.
Yeah, I agree. One other thing that I wanted to kind of point out before we close it down is that like the Qs did break lows, but the tech futures never broke lows. It's just interesting, like the dynamic that continues to shift out of a lot of what we are expected to see, or what we've seen over the last 5 years or so. So yeah, it's
What do you
definitely interesting.
Yeah, I have one more kind of tidbit before we wrap up too. Not to cut you off.
No, I'm done. I wanted to point that out as well.
What's your guys' take on energy currently?
Did you see the monthly chart?
Yeah.
To me, for as strong as it was, I was kind of shocked. Like, I wasn't shocked because I knew the energy needed to come in, but to put in a red candle
Last week.
Yeah, to put in a red candle on the monthly after the strength it's displayed is, I know it's on lower volume, so I don't like you need the confirmation here, right? But I find that to be really odd in these moments. And the last week and a half or so, it's been a bit more kind of distribution on the dailies, right? So there's cracks forming is all I can see. Whether those cracks lead to people buying hand over fist and reallocating from technology to more energy, that's what we need to be able to see here.
I've been wrong on energy for over a year, so whatever I say,
Yes.
just do the inverse of that. I don't know, man. We could be at a spot where it's time for new leadership. I'm not leaning that way currently. This could be an inside month, right? It could be some consolidation. The weekly is more damning to me when I look at it than the monthly is. The monthly is not great, but at the same time, you had a big down week last week. This week wasn't good either. I mean, you started out with a gap down to be able to close below the 9 EMA on the weekly. So not a great look, but again, I've been wrong on energy for over a year now, so I'm not going to say that I know, but it could be time for new leadership, but it would not.
It looks like a bear flag, Bags.
It very well can be. Yeah, it very well can be.
Nick,
I don't own any energy, right? So like
yeah.
I want there to be new leadership, but would it surprise me if all of a sudden it catches its breath here and rips higher for another, 3 months during travel season? No, that wouldn't surprise me.
But just look at that from mid-March, right? When it had that big kind of candle reversal move off the gap up. It's been fairly decent distribution, right? And kind of waning momentum along the RSI, the MACD, all that stuff. It's been stronger than other stuff for sure. But there's cracks forming is all I can see.
It's declining. I mean, there's no doubt that the strength is declining. But that doesn't mean that it can't decide to gather itself. And, the same point we were talking about the indices earlier, right? It can cool off for that next leg higher too. So I'm not going to pretend I know. I'm not going to, plant my flag on this and say it's doing one thing or the other. But at the same time, I've been wrong, and I'm dead wrong for over a year on energy, and it wouldn't surprise me either way.
How about you, Nick? You asked the question.
Yeah, I have a position in the XOM and USO, relatively small. I think short term, I think we see kind of a pull in. I think a little bit longer term, I think it continues to outperform. I guess I'm I only take this stance probably while the Ukraine Russia stuff and Europe stuff is going on. I guess that's kind of why I asked. I just didn't know. I was kind of curious. I think it's kind of an ugly daily chart, and that's kind of why I think it's kind of setting up. If it's kind of setting up like an ABCD down, where that A point's like the 81, 31. Your B point is that kind of 70, whatever. So if that gets taken out, let's see, where's my.
When you're done talking about that, talk about gold as well, real quick.
Yeah, so with the XLE, like I'm a buyer, like around 67, 68. GLD, man, you were pretty much spot on discussing it when we did a while back. It's sitting, I think, as long as it holds above 170. I'm sorry, 170. Shoot, I don't even know. I'd like to see it actually kind of hold here realistically, this 173 to 175. If it doesn't hold there, the weekly MACD is starting to cross the daily. On the monthly, we're starting to get the cross on the long side or the upside. I like a lot of the miners kind of where they're at, but I'm not willing to put any money towards the miners right now.
Yeah.
Or towards the gold in general. I like my money kind of in the energy space and kind of just want to see where that plays out.
Yeah.
I want my money fresh and ready for a leg lower.
And to me, it doesn't make sense on gold. You have about $180 to the upside. And so to me, it's kind of a no man's land, right?
Yep.
And if your thought process is gold is going to 3,000, it doesn't really matter too much whether you buy it at the 2,100 break or at 1,900. Do you know what I mean?
Yep. Yeah, I agree.
Like, yeah, you're obviously losing $200. I'm not saying that, but you're avoiding potentially months of pain.
Yeah.
Or sideways action.
I have this sneaking suspicion that gold is ultimately going to move with crypto at some point. I think that
interesting.
I feel like they're going to take okay, so let's just say crypto collapses. I think gold will probably roll over with it. I think at some point they come up with some crypto coin more or less tied to gold, and I think that's why gold is going to move in that upwards direction that we were kind of talking about. Like, let's say at $3,000 an ounce. If people are starting to lose faith in the federal governments and their ability to regulate currency and monetary policy, I just think it would make sense for them to say, hey, like, let's find a coin or a gold coin, or I don't know, something to like tie it to like a hard asset, similar to like the dollar gold. But that's just that me thinking in my.
To me, in that scenario, I'm long more crypto than gold in that point, because that validates crypto, for sure, not gold. Yeah.
Absolutely.
Right, like I wouldn't be looking for gold for a 50% move when crypto has things that move 50% in 3 seconds. So right?
Absolutely, like, I agree.
Like I'm at the camp that whatever move that happens in gold is just not worth the time and energy.
That's kind of what I'm thinking too. That's honestly what I'm thinking too.
Like, yeah, cool. Hit $3,000. I don't really care.
For sure.
It's like you've had 20 years of pain. You deserve 3,000, buddy. You do.
Totally.
My last thing, we were talking about Broadcom. If I were so inclined, I might be a buyer of Broadcom right here. This is a chart that I don't know how long ago I drew it. I just extended that blue trend that's been going since basically April of 2020. So I would be a buyer if I were so inclined, maybe here to start scaling in down to about 500. I think that would be a solid play if I wanted to put more money in chips because I needed a divvy.
Yeah. Can you pull that up on a quarterly?
Well, I sure can, my friend.
Awesome. Back-to-back inside months.
Yep. So
It looks
would,
good, right?
I wouldn't be terribly surprised if it wanted to come into close to 500. So that's
Yeah.
what I'm saying. If I were so inclined, I would probably start scaling in here because there's never any guarantee that you get that lower price. So scaling in between here and like that wick low, which is like 513, and so the 5 teens, 510 area. I'd feel pretty good about that if I wanted to get long.
Sounds good.
That's it for me, guys. Hey,
Yep.
I appreciate you two you two knuckleheads. I tell you this every week, but I really do. Thanks.
Same
Thanks
here,
for
brother.
thanks for taking your time on a Sunday. Thanks for kicking it with me. Thanks for dropping some knowledge. Love you two boys. Have a great evening. Thanks everybody who listen and watch. We hope this was educational. For the few dozen of you who are religious about watching, we really appreciate it. But
Absolutely.
have a great weekend. We'll see you guys as the market opens up on Monday.
Oh yeah.
Awesome.
Yeah, I think that was a great one.
That was a really good one.